Welcome to the 3-Minute Trading Coach. I'm Brett Steenbarger, and today we're going to talk about a different topic, finding a trading edge. How do you find an edge in the market where you have probabilities on your side? So I'll share how I have done that over the years, and perhaps that will get you thinking about some different ways of looking at patterns in markets that might have a positive expected return. Now, central to what I do is the collection of the database. I collect data day after day after day and keep the data in an Excel database so that I can analyze what has happened in the past when we are in a certain current situation. Many of my indicators measure what I call breadth strength. In other words, I look at indicators that show strength or weakness in a particular stock, and then I look for how many stocks in an overall index display that strength or weakness. So an example would be how many stocks on a given day close at or above their upper Bollinger Band, how many stocks on the day close at or below their lower Bollinger Band. Those data are available on a website, and in this case, it's stockcharts.com. And so I subscribe to that site, and every single day, I am scraping the data from the site and adding it to my database so that over time, I have quite a large number of instances that can help me determine patterns. So for instance, when we have very few stocks making trading below their Bollinger Bands, the forward returns over the next 10 to 20 days tend to be quite positive. I would have never known that had I not collected these data. It takes work. Day after day after day, I'm scraping different websites, collecting data, and making sure that I test it and that it really is telling me something unique. Okay, here's an example from the current market. I'm recording this over the weekend on the 21st of February, and this is a pattern that's showing up right now. We have had the percentage of stocks in the S&P 500 universe crossing above their respective 5-day moving averages greater than 50%. In other words, more than half of all stocks in the last day have crossed above their 5-day moving averages. That's interesting. Could be an example of breadth strength. What happens afterward? So I looked at the last 2 years of data. This was from the website indexindicators.com. They actually have a backtest function that's quite useful for those of you just getting into this. And it turns out that there were 57 non-overlapping occurrences over the last 2 years where more than half of stocks crossed above their 5-day moving averages. And when we look at those, we find out that after 3 days, so a holding period of 3 days, this is a swing idea, the average gain was 0.43%, and we had 2/3 of all occasions winning. In other words, 38 occasions up, 19 down. Also interestingly, 81% of occasions closed at a higher level during that 3-day period. What that says is that there's an overall positive return on the majority of instances, and that gives us historically an edge. That's not a final developed idea that I trade. That becomes a hypothesis that I start with. And then when I see, or in this case, if I see strength showing up in the market, I'm going to use that indication of strength. Perhaps we get an oversold level at a higher price low. I will use that indication of strength to enter the position and maybe take some off after the first profitable close. So in that way, I have a historical edge that I'm using, but I'm not wedded to it. It's guiding me, but ultimately I have to see that edge playing out in the market. I'll be writing more on the blog about historical edges. This has been the 3-Minute Trading Coach. Thanks again for your interest.